Toyota Motor Corporation is expected to post its first profit drop in 2 years. As well, competition from China and shrinking sales in its key markets are having a big effect on the company. Now, the company believes that its strategy of hybrid and hydrogen-powered vehicles is going to be the likely future for the company post 2030. And of course, it also believes that hydrogen engines could be the solution. Now, I think that's going to lead Toyota down a very dangerous path where their profits continue to fall. And remember, this is an exceptionally stubborn company. They've been very successful for decades, and their corporate culture is certainly not one that embraces innovation. They actually didn't take apart or even have a look at a Tesla vehicle until last year when, well, actually I believe it was the beginning of this year, when their engineers took apart a Tesla Model Y and said it was engineering genius. Now, what is Toyota's plan? Well, they have revealed one electric car, a new one. They're going to rebadge the Suzuki eVitara EV, which is coming next year, and make that kind of like a small EV. But other than that, Toyota doesn't have a whole lot of EVs in the pipeline. They did show 24 different so-called EVs that were coming back in 2023, but they were just all concept cars. None of them were actually planned for production. The media got all excited, but the truth is here that Toyota's profits and sales, in my opinion, are likely to continue to fall. Remember, they just had declining sales for 7 straight months worldwide. This is having an effect on the company, and I wonder if they're starting to rethink their strategy. Hello, my friends. Great to have you with us. I'm Sam Evans. You're watching The Electric Viking. Toyota will post its first profit drop in 2 years when it reports second quarter earnings on Wednesday. You're probably thinking second quarter earnings, what the hell? How does that make sense? Well, Toyota works on the Japanese calendar. It's really strange. I've always struggled to get my head around it. The Japanese calendar is entirely different to the rest of the world. Anyhow, when I say the rest of the world, you might be thinking to yourself, oh no, there's lots of countries that... No, you're wrong. Actually, most companies report corporate profits based on the Western calendar. So the January to December period. Japan is one of the very few countries worldwide that doesn't actually report their earnings based on the Western calendar. Anyhow, the world's largest automaker is expected to deliver $8 billion in quarterly operating profit, benefiting a little bit from making very high margins on hybrid cars that still use, like I said, old technology. The truth is, the nickel metal hydride batteries that Toyota uses were actually first installed into Ford Rangers back in 1998. Seriously, they were. But Panasonic actually manufactured those batteries, as they still do today for Toyota. So those batteries are actually quite cheap for Toyota to produce. They use existing production lines that have been around for more than a decade. But of course, more and more people are moving towards EVs. Sales of EVs have increased by 31% this year worldwide. And one of Toyota's most important markets in the world, China, well, that's the place where people are moving away from traditional hybrids, traditional gasoline-powered cars, to plug-in hybrids and EVs. Now, of course, Toyota says it has a solution for this. In 2026, it will use BYD's plug-in hybrid drivetrains. That's their solution in 2026, to move away from their own plug-in hybrid drivetrains and nickel metal hydride batteries and use BYD technology. Kind of does reinforce what I've been trying to tell people all along, that Toyota's plug-in hybrids are actually a pretty old school technology. Not to say there's anything wrong with them, but that's what they are. Recent sales and production figures have indicated a slowdown for Toyota though. It faced the delivery suspension of 2 models in the United States, and like global rivals, is dealing with fierce competition in China, by far the world's biggest automotive industry, where demand for EVs has continued to rise. In fact, over the last 3 months, 50% of all cars sold in China were electric or plug-in hybrids, with the majority of them being fully electric. And China is looking like by the end of 2027, it will be a fully electric car country. Of course, that means Toyota is set to lose more profits and sales in the world's biggest car market. The Japanese automaker is expected to report a 14% year-on-year operating profit decline in the July to September period to 1.2 trillion yen, which is 7.9 billion. Now that's based on the average of 9 analyst estimates in an LSEG poll. So they could lose more than that, but it's likely to be approximately a 14% fall. It's not that bad if you look at, say, Stellantis, whose profits have fallen by 42%, or the Audi group, Audi, Bentley, and Lamborghini, whose profits just fell by 91% over the third quarter. But anyway, it's still not very good. This marks its first profit decrease since the same quarter in 2022. It has already said quarterly global sales shrank 4% from a year earlier, and output declined by 7%. Toyota's strategy to expand its hybrid lineup in the US, some analysts say, will make it less exposed to any reduction in EV subsidies or similar potential policy changes in Washington, depending on the outcome of this week's US presidential election. Now, keep in mind, Tesla's EVs don't seem to sell any better with an EV incentive. There hasn't really been any change to Tesla's EV sales data month by month. If you look at 1 month versus a previous month, and you compare, Tesla, that model had an EV incentive that month, and then the following month it didn't, or it didn't, or the inverse was the case, it hasn't made any difference. So actually, a Trump presidency may have no effect on Tesla vehicle EV sales, but it may on other brands. We don't know yet. It's going to be interesting to see, though. Let me know what your thoughts are on that in the comments. Hybrids accounted for 41% of Toyota's global sales in July to September. Now, that's primarily not plug-in hybrids. They are, what is considered now old school technology, hybrids that can't be run on electric power alone. That was a total of 1.1 million vehicles. That includes the luxury Lexus brand, and that compares with 33% in the same period last year. Among legacy automakers, Toyota is considered the slowest to embrace EVs. Battery-only EVs make up just 1.5% of Toyota's sales for the first 9 months of the year. 1.5%. Toyota's chairman said last month that an EV-only future would lead to millions of job losses in the automotive industry. Now, of course, the majority of the job losses he's predicting would be job losses in Japan. Toyota kept its full-year profit estimate unchanged when it reported earnings for the April to June quarter, forecasting a 20% decline compared to the previous financial year on expected investment in both its strategy and suppliers. So there'll be a 20% decline in its full-year profits this year. 20% is a pretty significant decline, especially if it declines by another 20% next year and then another 20% the year after that. And considering Toyota has about $190 billion of bad debt, not good debt, bad debt, meaning it's the most indebted automaker in the world and one of the most indebted companies in the world, that profit decline is actually pretty significant. I mean, sort of like saying, we're selling lots of products, but we have an enormous debt, and our margins on those products have just gone down by 20%. And next year they could go down by another 20%. That means that Toyota is actually in a similar situation to the Volkswagen Group. They just aren't admitting it to the public. Shares of Toyota are this year up about 3%. In US dollar terms, they're actually up 2%. Now, the key issue here is, in my opinion, the big challenge for Toyota will be this. Audi's profits have gone down by 91% in the third quarter, and the key reason is having to write off their factory in Brussels in Belgium. Toyota will have to do the same. Over the next 10 years, Toyota will have to write off various factories around the world, so you can expect to see some headlines. They're going to be, Toyota's profit will be slashed in certain quarters where they'll be having to write off factories. The truth is, car factories are worth very little. Hyundai Group had to do the same thing. They built a factory in China, cost $1.4 billion. A couple of years later, they realized that they didn't need it and it wasn't working out. They tried to sell it. They ended up having to sell it for $200 million. We're talking a factory was only a few years old. It sold for $250 million, and it cost them $1.4 billion to build. So it's these kind of enormous write-downs and losses that will have a big impact on Toyota's profits, at least their book numbers. But the book numbers are very heavily skewed. Keep in mind, book numbers are representative of these factories bound to produce cars that people want. But once the world moves to plug-in hybrids and EVs, and I think we all will, by 2030, I think at least 90% of the cars sold worldwide will be a plug-in hybrid or an EV. The question will be then, will Toyota be making the cars people want? Well, first of all, if only 1.5% of cars that Toyota make right now are electric, and they don't believe electric cars are the future, which they do not, they believe that hydrogen is the future, then I believe Toyota is in probably a lot more trouble than the media or anyone else is really letting on.